This article is coming from investing.com. Why are natural gas prices plunging? Natural gas prices began the week with a drop, losing 5%. Last week, it was dominated by news of weak supply and low storage levels. But a bearish sentiment has taken hold of the markets this past Monday. Again, some profit taking as well as forecasting of warm weather. Now, natural gas traders are already focusing their analysis on the weekly EIA storage report, which is due on Thursday. We've seen impact of wildfires in Alberta, Canada. Low wind energy productions will become clearer. Let's get into this video. Natural gas uptrend over or not?
Natural gas is on the move once again, but does it have what it takes to break above key resistance? Hello and welcome back to our channel. My name is Daniela Hathorn, and in today's video we are going to be talking about natural gas because we have seen some moves. Last Thursday, the commodity was up 9% on the day, and it's also up 34% since the lows last month. So before we get into the video, please like it, comment if you have any questions or suggestions, subscribe to our channel and turn on your notifications. So as I was saying, natural gas is on the move higher, up 9% on Thursday and up 34% from the lows last month. The chart has also crossed for the first time since November last year, the 100-day simple moving average, which is alluding to potentially a little bit more sustainability to this rally than what we've seen in the last 6 months. But fundamentally, we still have the same playoff between demand and supply. Now, remember, throughout the winter, we were expecting to see an energy crisis or a deep energy crisis in Europe because of those rise in energy prices and the need to consume natural gas and oil to heat homes. But of course, those milder temperatures, not just in Europe, but in the Northern Hemisphere in general, meant that we had less demand for natural gas, and therefore the prices tanked significantly throughout the last part of last year and the beginning of this year. Since then, we've been trading in this pretty tight range below $3 for natural gas, and we seem to be stuck there still. We've had a few attempts to break higher, haven't managed to do that. But as I say, we are on the move once again, seeing that move above the 100-day simple moving average. Now, in terms of summer period, it's not usually a period where you would think to be bullish on natural gas. And the one caveat to that would be if we have a heat wave, which we saw last year, we could see again this year, because then we have more demand for consumption of natural gas as people use more aircon. So in general, they just use more electricity to cool their houses. So that could happen. But generally, if we're looking at the summer period, and we have to go pre-COVID to look at this because there's been so many fluctuations in price since then with the energy crisis out of Russia and Ukraine, COVID has all spiked gas prices. But if we're looking at pre-COVID, we usually tend to see a lull during the summer months and then prices picking up in September, October once again as the colder months come. But in general, not usually a period of bullish demand for natural gas during the summer. But one thing to watch out for, and a big cause as to why we saw that rally on Thursday, is those wildfires in Canada. They are centered around the Alberta region, but they are reducing the exports of natural gas from Canada. In fact, just as an example, the flow from Canada to US of natural gas has dropped to a 25-month low because of those wildfires in Canada, which have been affecting gas and oil markets as well. So that is generally what we have at the moment, a little bit of reasoning behind that spike on Thursday. So let's jump onto the charts now to see how they're looking. Okay, so here we have the natural gas chart, capital.com charts by TradingView. And as you can see here on Thursday, that spike higher, up around 9.2% on the day. On Friday, a little bit of consolidation around those highs coming down, but ending the day pretty much unchanged there, showing a clear pattern of indecision and also reversal within that attempted bullish trend that we saw on Thursday. So far today, not much going on. We've seen a little bit of a move lower, but pretty much unchanged so far on the day. As you can see here, this red line, that 100-day simple moving average. And I was saying we haven't been above that level since the month of November last year. So quite a significant move. Of course, the continued depressed price has helped those moving averages come down. So it's not so much a case of having seen a big price rally that has taken us to the 100-day moving average, but rather those moving averages coming down to that lower price. But nonetheless, managed to break above it. We are now currently above the 20, 50 and 100-day simple moving average. So gaining a little bit of traction there in the short term for potentially a push higher. So it does question, are we starting to form that base from where we are going to see that rally take off? I think a key area for that is going to be that $3 mark, which is this line here. It's a key area of resistance. We saw it back here in March when we attempted to break higher back then. We did come from a sustained rally of higher highs and higher lows. But again, the $3 mark really acting as resistance, pushing that price lower once again. And that's when we saw the lows for the year so far back here in mid-April. So as I said, a lot of resistance around that $3 mark. We've already started to see a little bit of a correction after that strong rally on Thursday. That is normal. After such a move in prices, traders start to digest whether that move is sustainable to go further or whether then there's a little bit of a period of correction needed to continue that move higher. Nonetheless, it has put attention on that bullish potential. We could see that short-term reversal, but I do still think there is a lot of resistance ahead. It's definitely not going to be a clear upward path if we do start to see that move higher. Been very volatile. I'd expect it to continue to be that way. There is a lot of selling pressure as well. And as I said, the perception is that during the summer months, gas prices tend to be depressed. So I would expect those sellers to be attentive and watching any situation and opportunity to short the market and to take advantage of that slight rise in gas prices. So until we clear that $3 mark, there really isn't a clear pattern of bullish momentum there for natural gas prices. Now, if we're looking a little bit at the RSI, you can see that move higher, really taking it to those overbought levels. The high on the RSI is starting to come lower, as you can see from the high that we saw on the 18th of May. So we'll have to see what happens to the price if we start to see price also coming down and forming those lower highs. Then essentially it's moving in correlation with the RSI. But if we're seeing prices continue to build higher and showing higher highs while this RSI is pointing lower, then we have that divergent situation where it really indicates that bearish pattern unfolding. So overall, as I said, a lot of resistance at that $3 mark. Also keep in mind that $3 mark I think would be around 45% increase since the lows on April. We can measure that now. 45% increase. That is a big range to cover. So it may be the case that we don't even reach that $3 mark before we see that selling pressure really taking hold because of the extent of the move so far. But as I said, short term, it looks like we could be gearing up to a little bit of bullish momentum, especially those wildfires in Canada helping keep that market tight. But as I said, it's not going to be a clear upward path. There is a lot of sellers looking out for an opportunity to get into the market. That is it for today's analysis of natural.
Now, this was a great video on the analysis fundamentally and technically. Before we get into my charts, I've been talking about natural gas bottoming in multiple videos over the last couple of weeks. You can see that the buyers have been defending this $2 level. You can also see price on the weekly chart broke this resistance at 230-ish. This is the $3 resistance level that the lady was talking about in the video, which is my short-term target. Now, last week, as the lady mentioned, we've seen a huge rise in price and then the collapse for multiple reasons. Profit taking, next 2 weeks are going to be milder weather. However, the just to give you an idea of fundamentally where things are heading, the electric power sector uses natural gas to generate electricity. Um, in 2021, the electric power sector accounted for 37% of total U.S. natural gas consumption. Natural gas was the source of about 30% of U.S. electric power. Now, the EIA just came out with a report about a week ago saying that this summer, between June and September, will be the second highest electricity demand on record. And so that's bullish for folks who are long natural gas. Um, didn't even think about the Alberta news and the forest fires. Um, so I went long through options on the UNG, which tracks natural gas. Um, Again, although UNG has been making lower lows, Divergence has been making higher lows. So this is positive divergence, and I do anticipate that natural gas prices will be going higher. I do have a $10 target on UNG. Uh, August time frame. Um, that's just a rough projection, but it really is going to be based on where natural gas heads. So let me just zoom out. So we have a bunch of simple moving averages starting to cross over, and they should now serve as support since price is above all the or most of the simple moving averages. Now price did pull back into an area of where there were buyers at the 235 level. Um, this level was formed on the breakout on the surge in price last Thursday. So let's see if this level can hold. Like I said, I am long natural gas via UNG. That's the ETF that tracks natural gas. I do have a $3 target. Um, I bought UNG Leap options in January 2025, so I'm giving myself enough time to be correct. Just to give you some perspective, and not to say that we will get back to um, the near-term all-time highs, but price not too long ago, August of last year, price was at 950. We are at 235. So say we get a scenario that we had last year, natural gas prices can 4x, 5x. I don't anticipate that happening, but I do anticipate price moving higher. Again, I do believe that the lows are in, um, and it's just a matter of time before prices move higher. Now, Mother Nature is going to be the X factor. If we get a higher than anticipated summer, that's going to put constraint on natural gas demand. All right, for ACs. If we get a colder than expected winter, that's going to also put a strain on natural gas. You also have another X factor in Putin. He's already said that he's going to chokehold Europe um, with regards to natural resources. So let's see if this daily buyers level can hold. Again, that EIA report is tomorrow. which talks about the natural gas storage levels. Um, that will be the catalyst to either send prices higher or lower in the short term. But $2 is the support level that I'm looking at to hold moving forward. Thanks for watching. Subscribe. Please like the video.